Asian stock markets have followed Wall Street lower today after investors saw minutes from a U.S. Federal Reserve meeting as a sign that America's central bank might hike interest rates faster to cool inflation. Notes from last month's Fed meeting showed policymakers believe the U.S. job market is nearly healthy enough that ultra-low interest rates are no longer needed. Well, meanwhile, Shopify Incorporated is no longer the leading stock in Canada. The Ottawa-based e-commerce firm's stock price fell another 2.5% yesterday for a 13% drop in the year's first two trading days amid rising bond yields and interest rates. Meanwhile, the Royal Bank of Canada returned to its perch as the country's most valuable company. All right, well, joining us now to give us his outlook for investing in 2022 is Brendan Caldwell, Director of Caldwell Securities Limited. Brendan, welcome back.
Thank you, Nima. Happy New Year and happy 12th day of Christmas.
Happy New Year, Brendan. Now, it's the first week of January, and as you mentioned, a brand new year. So when it comes to investing, is there anything important that investors should do to prepare their portfolios for the coming year?
Well, I think that investors would not be doing the best thing for themselves if they react to arbitrary events like the turn of the year. They should do investing as a way that's going to actually serve their needs. They should think about what their needs are, what they want to achieve, and do it that way rather than saying, well, it's the end of the year, I need to do this, or it's the beginning of the year, I need to do that, or interest rates are definitely going up, or Omicron's definitely going to get worse. One thing we know about the future is uncertain. So people would do better, I think, to be more introspective of what they need rather than to focusing on external events about which we have no control.
All right, Brendan. Well, we do know that the tax season is coming up. So how should investors prepare for it? Should they maybe top up their RRSPs or sell stocks that have had significant gains?
Well, there's a couple of ways to approach it. So as you know, for the first 60 days of the year, you can make a contribution to your RRSP that can count toward your last year's taxes, that can count against your 2021 taxes. And contributions made to your RRSP are, if you have a big gain in something and you contribute that in kind, it is taxable, but it's taxable at the capital gains rate, which for the moment remains considerably lower than the regular income rate. So rather than selling a stock in which you have a big gain, you might want to look at offsetting the capital gains tax you might pay with the income tax you might save by contributing that to your RRSP, whatever stock you have a big gain on, whether it's Shopify or the Royal Bank.
All right, Brendan. Well, with the new year comes new investors. So any advice for them in terms of the best time to invest in 2022?
Today. Do it today. Now, hear me fully, though. You don't have to do everything today. If you are literally uninvested in the market and you just can't stand it anymore because the market's done so well all through COVID, then I would strongly advise people to do something. Not everything, but something. 10% of the total that you're going to do. So if you plan on investing, I don't know, $10,000, do $1,000 today, and then do $1,000 next month. Because if you do a little bit today, even if it's just $1,000, even if it's just 10%, the next right thing becomes easier. If the market goes down, you say, I'm so smart. I've saved 90% of my money and I can invest more next month. If the market goes up, you can say, thank goodness I've done something. We'll do a little bit more this month. So whether the market goes up or down, if you've done something, the next right thing becomes easier.
All right, Brendan, anything else that investors should look out for in 2022?
I think it's an interesting phrase, look out for, because all the things that we think are going to be causing issues, whether it's Omicron or rising interest rates, as you talked about in your introduction, all the things that the market has accounted for are probably accounted for. So the next thing that's going to make the market move either up or down is probably going to be a surprise and almost by definition can't be counted on. I think Omicron will probably work, or the COVID will work opposite to how most people think. Since this pandemic has been going on, interest rates have been very low. And as long as the pandemic remains forefront in people's brains, interest rates will continue to be low. I think the Federal Reserve in the US and central banks generally are going to be very slow to raise rates into the teeth of a global pandemic. Once the pandemic has subsided, however, interest rates might rise, and that probably would be the single thing that has the determining factor on interest on stock markets, because these stock markets have been so robust, at least in part, because interest rates have been so low.